Inventory is up, new listings are up, days on market are up, and sales are also up, which is wild and why we have got to talk about the luxury real estate market in Miami. You are about to get a VIP deep dive into the most contextual, most thorough overlay of what's happening in the Miami-Dade luxury real estate market, whether it be for single-family homes, condos, and townhomes. We're talking about it all so that you can make the most informed decision for yourself and for your family. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent, and it's a pleasure to bring you guys these monthly updates so that you guys can know exactly what's happening in the real estate market here in Miami-Dade. And this data is coming straight from the MLS, the backbone of the real estate industry, so you know it is the most accurate and most thorough and contextualized information that we're going to get down on a granular level and analyze today here in this video. So let's go ahead and get started. Now, first things first, let's talk about inventory. We're going to talk about single family homes first, which is everything over $1.5 million. And then we're going to talk about condos, which is everything over $1 million. So the number of active single family home listings continues to climb to new heights, now reaching 1,451. Okay, this is historic new heights for active level of inventory for luxury single family homes in Miami-Dade. It's up 5.7% from December's 1,373. And that's up 209 units or 16.8% from last January's 1,242 active listings, okay? So inventory continues to climb in the luxury space for single-family homes. Now, new single-family home listings came in at 346, that's our blue line there. That's up 124 listings from December's 222, which is a 55.9% increase month over month. Now, it is normal to see a December to January uptick after the holidays and everything, but compared to last December to January's uptick of 37.1% from 178 to 244, it's definitely a sizable difference. Now, by the way, 346 new luxury single-family home listings is a year-over-year increase of 41.8% of 102 additional new units, okay? So year-over-year, we've got more new units. The increase from December to January was bigger this year than last year, and overall, active inventory is reaching new heights, okay? So next graph I want to show you guys here is the days on market, average days on market rather, and the closed price to original price ratio. So active days on market for single family homes came in at 141 from December's 112 days on market. That is a increase, okay? Now, it's also up from last January's 113, okay? So, definitely interesting to note. Days on market is increasing. The market seems like it could be starting to slow down a bit, but, we'll see. Remains to be seen. Still, kind of moving along at a good pace, but it could spell trouble for the future, the fact that we're seeing so much inventory coming into the market. Now, closed price to original price ratio is a percentage, difference of what a property is listed for versus what it ultimately sold for. So if it's listed for, let's say, $2 million and then it sold for $1.8 million, that's a 90% closed price to original price ratio because it's $200,000 less than $2 million. Okay. Now, the closed price to original price ratio for single family homes came in at 91.7%. That's down 1% from December's 90.7%. However, it's up 4.7% from last January's 87%, okay? So we see this, last January was a big dip in the closed price to original price ratio. In other words, people were getting pretty hefty deals compared to the list price and the ultimate sale price compared to now. But, at 91.7% closed price to original price ratio, there's still plenty of meat on the bones. There's still plenty of deals that we can go out and get if you're a buyer in this market, okay? Now, median sales price for single family homes is coming up next here on the next graph, along with the number of sales, all right? Now, the median sale price for single family homes in the luxury range of over $1.5 million was $2,395,000. That's actually up $95,000 or 4.1% month over month. Year over year, the median sales price is up 4.6%, or $104,250 year over year. So 4.6% appreciation in the luxury single-family home space. Not too shabby, especially considering all the headlines out there that are saying doom and gloom. If you had luxury home in Miami-Dade over the last year, you've seen some pretty, not crazy, but normal appreciation. 4.6, normally we say 4 to 5% is what you expect to see in a normal market for appreciation, although, Miami is certainly far from a normal market. Now, the number of sales you can see here in the blue line came in at 103, which is actually up 16 units from December's 87 sales. Now, this is actually unusual to see since sales are a lagging indicator, meaning that the sales that happened in January went under contract in December or maybe even November. So normally you expect to see less sales in January, which is what actually normally ends up happening because, less people are shopping for homes during the holidays. But hey, it's cold up north in the winter, so I hear, and I don't blame them for wanting to get out of Dodge, and coming down to Miami, and those sales picking up in January. Now, the months of inventory is going to be coming up next here, along with expired listings. And the months of inventory, that uptick in sales that we talked about actually helped lead to a 2-month decrease in months of inventory from 16 months to 14 months. All right, that's that green line that you see there. So last January was 16 months of inventory. So it's definitely still a buyer's market, but it's closer to a normal market than this time last year. So that's something interesting to note. The market's sort of normalizing a little bit. All right, now expired luxury single-family home listings, that's just basically, contracts that expired between sellers and their listing agents, and the homes are no longer on the market. The expired listings for January came in at 213, which is down from December's 356. It's 143 units less than 356, coming in at 213, which is a 40.2% decrease. Now, it is normal to see less expireds in January than it is in December, because December, that's the pops that you see here. Each one of those pops happened in December because, a lot of times people sign their listing agreement until the end of the year. So a lot of listings expire on December 31st every year. And that's why we see more expired listings in December than any other month every single year. Okay. So that's something interesting to note, that it's normal to see less expireds in January than December. Last January we had 220 expireds, so compared to 213, a little bit less this year than we had last year, but pretty similar number. Nothing too significant there. Now, next up, let's talk about condos, okay? Luxury condos to be specific, because this is a luxury market update video, and that's what we're going to talk about. So luxury condos, and when we say luxury condos, we're talking about luxury condos and townhomes, because most townhomes are legally structured as having a condominium association attached to it, okay? So luxury condos and townhomes, the number of active luxury condo listings versus the new listings here is this graph, and you can see we've been on a uptick here over the last 6 months or so of inventory, active inventory, and then we had a recent uptick here in new listings. So the active luxury condo townhome listings came in at 2,394 units of inventory. That's a lot of inventory here in that green line. It's 91 additional units from December for a 4.0% increase month over month. Year over year, inventory is up 281 units, or 13.3% from 2,113. So 2,113 was over here, and then right now we're at 2,394. Okay, so inventory increasing year over year, but most of that happening in the last 6 months, which is also interesting to note. All right. Now, new condo listings actually came in at 497. That's up 153 units from the month before, which was 344. That's a 44.5% increase. Now, compared to last January's 408 new listings, we see a 21.8% increase in new listings from 408 to 497. So also something interesting to note there as well. Now, next up, let's talk about average days on market. So average days on market for luxury condos and townhomes came in at 163. That's the green line that you see there. And that's up 5 days on market month over month. Okay, so a little bit of a slowdown month over month. It's up 13 days on market year over year. Okay, so might not sound like a lot because you're talking about 163 days. So what's the difference if it went from 150 days over here to 163 days over here? Well, it's not so much that 13-day difference is like the end of the world or anything like that, but it's a sign that the market overall is slowing down. Now, in my opinion, that's due to there being, number one, we're in a high interest rate environment. Money is more expensive. And also, two, there's way more supply out there. So it's going to take longer for all of these homes to sell, right? Which, makes a lot of sense, okay? Now, the closed price to original price ratio, that's the blue line there. In case you weren't watching the single family home part of the video, that's just a percentage difference between what a home is listed for versus what it actually ended up selling for. So if it was listed for $1 million and it sold for $900,000, that's a 90% closed price to original price ratio. So closed price to original price ratio, the blue line there, came in at 92.1%. Despite the slowing market, aka the higher days on market, that's actually up 0.3%, meaning sellers are getting a little bit closer to their asking price, but nothing crazy again. And the last January's closed price to original price ratio was actually also was 91.8%, which is what it was in December. So pretty interesting there. Some stability in terms of the closed price to original price ratio. Even though we've seen some zigging, we've seen some zagging, it's kind of sticking around that 92%, 91 to 92% range, okay? Now, the next up here, we're going to talk about median sale price. So median sale price of condos in the luxury range of over $1 million skyrocketed $250,000 from 1.7 million to 1.95 million. That is a 14.7% increase in just 1 month, okay? So that is very significant. I mean, look at this graph, okay? Look at that green line. You see how much it popped up in just 1 month, which is super interesting to note. Again, it's cold upstate, New York and all the northern areas of the country. So I don't really blame them for wanting to get out of there and get into an area that's, warmer. So, hey, if you said, hey, median sale price increased a lot during the winter, I'd say, yeah, it makes sense because, there are people vying for that condo that they really want. They're trying to get down here at all costs, get out of the snow. Now, year over year, we actually saw a 18.8% increase of $308,750 in that median sale price, okay? So it went from this January over here was $1,641,250 median sale price to, like I said, 1.95 million over here. So getting close to $2 million median sale price for condos in the luxury range here in Miami-Dade. Now, luxury condo sales came in at 111 sales. It's down 1 sale month over month from December's 112. And last January had 110 sales, so up 1 sale from that. So down a sale, up a sale. It's kind of similar in terms of the sales, right? But we can see there's been a big change compared to, during the Zoom rush over here, the amount of sales that we were having there that were in the 300s and, even peaking above 400 right there. And for a brief moment in 2022, now we're back down into this sort of, more reasonable sales range where, probably will stay here moving into the future, more likely to be in this range than going back to this range because, think about what was happening during that time. Everyone and their grandma and their, pet, schnauzer. I don't know why I picked schnauzer, but everybody was trying to move to Miami at that point in time. A lot of people are still trying to move here, but nothing like during the Zoom rush, okay? Now, next up, we're going to take a look at months of inventory and expired listings. So months of inventory, which is basically how long would it take to sell the existing supply if no new properties came on the market. Months of inventory for luxury condos and townhomes ticked up from 22 months. It's ticked up to 22 months from 21 months. So just a 1 month increase there. That's the green line that we're looking at, but pretty steady increase in months of inventory over the last 6 months. Again, this is going to be due to the increasing supply because as you have more supply, unless you see sales go, outsized, wild, crazy sales, you're going to see an increase in months of inventory. So really no surprise there. Last January, we had 19 months of inventory over here, okay? So that's interesting. And expired condo listings came in at 331. That's up 41.3% from 564. And again, this is normal to see more expireds in January. I'm sorry, in December versus January. Last year's December to January expired, difference was 43.2%. So 43.2. Obviously, that's a bigger percentage difference than 41.3. So, you had a greater disparity last year than this year, which, that last year went from 581 expired listings to 330. This one went from 564 to 331. So kind of similar, but, also a little bit different. So that's what's happening in the luxury real estate market here in Miami-Dade. Hope you guys enjoyed the video. If you want personalized expert assistance in the Miami-Dade real estate market, whether you're looking to buy, whether you're looking to sell, whether you're looking to invest, or if you just have questions, I am your go-to guy. Head down to the description down below. All my contact info is there. Reach out to me. I'd love to hear from you and help you out with your specific circumstances and situation and help you achieve the best possible results that anybody is going to be able to achieve for you, guaranteed, all right? Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent, and I'll see you on the next one. Peace.